Well, a shock election result is rattling not just the political world, but the business sector too. Yuka Roya is here in the studio with me. So, Yuka, how are the markets reacting to this news?
That exit poll shock has ripped through the currency markets too, Richelle. The pound, the British pound, has taken a knock. It fell 2% to a two-month low immediately after voting ended, and the first exit poll results came in. It had since recovered a bit, but it's still trading down over 1.5% against the dollar and the euro. The financial markets had been expecting a clear victory for the Prime Minister, and the fact that the Conservatives failed to secure an absolute majority, parliamentary majority, and appear to be heading for a hung parliament sent investors rushing to move their assets in sterling to other currencies. Now, the British pound has already been under pressure since the Brexit referendum a year ago, declining from over $1.31 to $1.21 today in the past 12 months.
So how are Brexit jitters affecting the British economy?
Well, the vote comes at a time Britain's economy has already been under pressure. Just a couple of days ago, the OECD predicted that the UK economy will slow down next year. Its GDP growth forecasts going down from 1.8% last year to 1.7% this year, and just 1.6% this year rather, to just 1% in 2018. And the latest statistics show that the UK had the lowest GDP growth in the European Union in the first 3 months of this year. Its economy grew by just 0.2% during this period, down from 0.7% in the final quarter of 2016. And that puts Britain at the bottom of the EU league table. Now, compared to Germany, that compares to Germany's 0.6% and France's 0.4%. Now, an economic slowdown could push the unemployment rate above 5% after it fell back in March to the lowest level since 1975. Now, some say that a hung parliament may actually be a good thing, as Flo said earlier, since it may lead to a soft Brexit. But it also means political uncertainty and possible delays to Brexit negotiations while coalition talks are taking place. So one analyst explains why political uncertainty scares investors so much. Take a listen.
I think now what they want to see is certainty. Markets always hate uncertainty. It's a great cliche, but it does ring true. And I think we just want to see some stability in the domestic political scene, especially at this really important moment when we're heading into Brexit negotiations. And we need to have a government that's really fit for heading into that. And that the risk is that if we have a coalition or we have a minority government, we just don't have that stability at home to take on Brexit.
Now, UK exposed shares were under pressure in Asian trading today, but otherwise the stock markets have been mixed so far. Japan's Nikkei adding almost 0.5% and South Korea's Kospi up as well, while share prices in Hong Kong and Shanghai are down below the flat line. This comes after the US markets finished in the green last night, following the much-awaited congressional testimony from the former FBI director, James Comey.
OK, Yuka, thank you so much for that. Yuka Roya there with the business update.